trading psychology, we're going to end it off with trading psychology, but it is one of the most, probably the most important part of being a trader, being an investor. Because if you don't know, the market is strictly emotional. That's all it is. You know, the stock market, any market that you're in, is purely based off of emotion. So if everybody wakes up in the morning and says, I hate the stock market, it's going to be a crash. If everybody wakes up in the morning and says, I love the stock market, the price is going to continue to go up. It's all purely based off of emotion. And that's pretty much the only thing that's driving prices up right now. So confidence and the illusion is part of the reason why we're at our peaks at this particular point. As soon as confidence starts to dwindle away, you'll start seeing more red than green. But either way, you are equipped with the knowledge and the information to respond, whether the market goes up or down. All right. So go ahead and raise your hand, and I'm gonna open up this Q&A, and we can go ahead and start out with that. Who we got? Heaven?
Yes, good afternoon. My question is, I just want to be like for sure about this particular strategy. So I wanted to do 100 shares of People's United Financial.
Yeah.
And I was thinking about doing a buy call on it. When you do a buy call
without all the drama.
and hold on a second, I'm trying to pull it up on Robinhood. When you do a buy call on that particular stock,
yeah,
you're going to want for it to go up before you exercise it. Is that correct?
All right. So just to give you a update on PBCT. You first of all, you got to make sure that you're in tune with every single stock that you're investing in. All right. If you're not aware of it, PBCT was just acquired by. Hold on a second.
Hey, Derek, can you mute yourself, please?
Yeah, I got it. I'll take care of that. My bad. All right. So as far as PBCT, you need to be aware of the news that's around PBCT. If you're not aware of it, they were just acquired by M&T Bank.
Okay.
All right. So they're about to suggest that you sell your holdings. I don't really know if they're going to continue operating the way they are right now. If somebody comes out and says, oh, y'all need to sell off, then you're going to end up seeing a dip in that price. I'm not telling you to sell. I'm just saying that there's been talks of the analysts saying that they might put it in a position where they sell it. All right. If they don't change anything as far as the structure of the company and they continue to pay their dividends and everything stays straight, then it'll still be a good stock to invest in. I just want you to make sure you're aware of the news and what's actually happening with PBCT. All right. So when you're trading the options and you want the price to go up, if you're bullish, you have a bullish outlook on that specific stock, you want to do a buy call. All right. The expiration date will depend on whatever your situation is financially when you're ready to buy it, and also according to any events that might come up in the future for the specific company. When you're in a position where you want to get a buy call, you want to make sure that you're in the money. So your strike price has to be below the share price. You feel what I'm saying? A lot of people try to save money by going for the cheaper price with a higher strike. But what you're doing is you're putting yourself at a disadvantage because there's no guarantee that the share price is going to actually meet your strike price and go above it. So you want to buy into equity. That's the whole point of being in the money. You want to buy into equity. If I have a $17 strike price and the price stays where it's at right now, when I take on those shares, I gained $94 automatically because, 94 cents times 100. You know what I'm saying? I walked into equity. You feel me? Minus the amount of money that I spent on the actual contract. But you want to put yourself in a position where you're walking into equity. So if you think the price is going to go up before expiration, then put yourself in a position to where you can get in a lower price that where it's trading at right now. And as the price goes up, you'll start seeing more profits come in for your contract. Your contract is going to gain value. So it'll put you in a position to where you could either exercise the contract and take on those shares and walk into equity, or you could sell the contract and make money off of the value of the contract. And by you being a strategic investor and buying it at a right time, at the right price, to where the contract actually gain value itself. All right. You understand that?
Okay, yes, I do. I have one question though.
Go ahead.
When you say you selected that 17 strike price and then you paid the $130 for it, once you exercise it, do you have to pay more money to exercise it, or the $130 is that it for the 100 shares? That's what
all
I'm getting confused about.
You're only gonna pay $130 for this contract. Okay. But if you want to exercise the contract and take on those 100 shares, what you're doing is you're agreeing to purchase 100 shares at $17 a piece. So you have to have 17 times 100 in your account in order for you to exercise this contract.
Okay, that's what I wanted to know.
Yeah.
I was getting confused about that. I thought the 130 was that was it. I wasn't sure if it was that you needed the 1700. Okay.
Yeah, the contract costs $130. The shares cost $1,700.
Got it.
All right.
Okay.
Yeah.
Thank you so much.
Yeah, no problem. TJ.
Hey, what's going on, man?
What's up?
Real quick, I got a call for Workhorse, and trying to see how do I get out of that? How do I get out of it? What do I need to do?
Okay.
It expires on the 5th.
All right. So when you have a contract, if you go to your homepage or whatever, if you're on your phone, whatever case may be, the homepage on Robinhood, you're gonna have the list of positions that you're in. You're gonna have the stocks that you own. You're gonna have the contracts that you have out right now. You just click.
Yeah, I gotta pull it up now.
Yeah, you click on the contract. All right. And at the bottom of the screen, if you're on your phone, it's at the bottom. If you're on your computer, it's right here. You wanna click trade, and then when that opens up, it'll have an option. It should say close. Close should be one of the options on there. You see
Okay,
that?
go to view all options. Okay.
Just go. No, when you're on the actual page for Workhorse, are you on your phone?
Yeah.
All right. So on where it says Workhorse, you on that page. You go all the way down to the bottom of your screen and click where it says trade, and it should open up options for you as far as just options, stocks, whatever, buy, sell. It should say close on there.
Okay.
You see
I
that?
guess it's just it just got an X. The X means close.
Nah, it should be a button. Let me see 1 second.
Yeah, I'm on my phone.
All right, hold on 1 second.
And I got view all options, sell, buy, then it's an X.
Okay, so you bought an option, right? You have a call.
Yeah.
All right, so click sell.
Okay.
To get out of your contract, you got to do the opposite of what you did to get in it. So if you bought in a contract, then you have to sell it to get out. So click sell, and then it should open up what you have, and then it should say how many contracts you have listed, and then you just click however many contracts. If you got one, just you type in one, and then it'll give you the option to close out right there.
All right. Okay, I got you. And then they give me a credit for whatever it sells for.
Yeah, exactly.
I got you.
All right.
Now I'm gonna take a loss. All right.
It's going down.
Yeah, I think I paid like 140 for the contract.
Did you get an in the money call?
Nah, I didn't.
Yeah, so that's a lot. That's a mistake that a lot of people make, because they want to go with the cheaper option, but you got to make sure that you're in the money. So when you want a stock to go up, you want to make sure you're in the money. When you buy call, in the money means the strike price is below the actual share price. And then when you want to do a put, when you think that the price is going to go down, in the money is actually higher than the actual strike price. All right, so just make sure that you're in the money. Now, obviously, the price is going to fluctuate to the point of where you might start out in the money and then the price ends up dropping and now you're not in the money no more. That can happen, but at least put yourself in a position to where you buying a contract that's in the money off top. So that way you start getting some profits if it goes your way. But yeah, good thing that you decide to get out, because one thing a lot of people do is when they start seeing themselves losing, they just sit there and take it. You don't have to sit there and take it. I strategically wanted y'all to understand how to set your stop losses and your take profits before you actually get into the trade. So that way, you know that if price goes down to a certain point, you're going to get out of there automatically. You don't want to sit there and just let all your money just get taken away. I don't care if you spent $10 on the contract. Don't just let them take your whole $10. If you can protect yourself and get out with losing 5, then do it. All right. Because there's all you want to live to trade another day. And we're going to get into that with the trading psychology today. All right.
Yeah, that's why I posted in the group, man. I'm gonna go back over class 3 and 4 again, just for that and 2 for that risk management, because I ain't look at it right. That's on me.
Yeah, it's all good. It's all good.
I appreciate it.
Yeah, no problem. Who we got? Albert?
Yeah. So my question is a bit in line with TJ's,
Yeah.
and it's in regards with the put credit spread.
Okay.
So let's say so you saw the put at a price that is higher than the price where you buy the put. So that'll put you in the spread, right? But then what if the strike price falls below? I mean, let's say so your spread is losing money. How do you get out, or how do you mitigate your losses?
All right. So if you're in a put credit spread, that means that you have a bullish outlook on price and you think the price is going to go up. For put credit spreads, because you have 2 separate contracts, you just initiated 2 different things. All right. If the price starts to go down and it gets close to where your strike price is at, then you want to get out of the trade to help yourself mitigate some of those losses. Same process. You have to do the exact opposite of what you did to get in to get out. All right. So on Robinhood, you have the option to close out everything at once. All right. If you're on your phone, on the home page, you click the put credit spread, and then at the bottom, you should be able to click trade. And when it opens up, you have the option that says close. If you click close, Robinhood will close both trades automatically. If for some reason you can't initiate both of those and close them both, then you have to do the exact opposite of what you did to get in to get out.
Okay.
So you sold a put and you bought a put. You have to buy a put and then you have to sell a put. So the put that you sold, you have to turn back around and buy it back.
At the same price, I'm assuming.
Well, however much it's going to be able to sell for.
Okay.
Because if the price is going against you, then that means that you're gonna have to come out of pocket because you lost money.
Right.
Even though the credit was given to you, you're still gonna have to you're gonna have to lose some money. You have to pay something back to get out of the trade. And the same thing, if you for the put that you bought, you have to sell that. So normally, what I would tell people is if you trying to keep yourself from dipping into your pockets or whatever, and you want to get the money back first, then you should sell the put to get your money back, and then buy the other put back with the money that you got from when you sold it. So if you had to get out of the trade, then I would sell the put first and then buy the other put, rather than the other way around. So the put that you sold, you want to initiate that one last, basically is what I'm saying. Because you got to come out of pocket to get that one back. You feel me? So if you have to get out of the trade and they're not going to allow you to close them out all together, then you probably want to go ahead and go pull this one up on your options chain, and it'll have like a +1 or +2 or plus whatever, however many contracts you got. You click on that, and then you'll go over here and you'll sell it. I mean, you'll go ahead and buy it. I'm sorry, you'll sell it because you're buy put. So you'll sell this contract, get your credit from it, and then you go over here and then buy this one back.
Okay.
And then you'll be able to close all of them out.
Okay, makes sense.
Right.
Thank you.
Yeah. Paige? Paige, you there? No? All right, Esco. Esco. All right, cool. Anybody else got questions? I know we got a couple of people with their hands raised, but I guess they can't hear me or I can't hear them. Anybody else before we get
Yeah.
started?
Hello?
Ivan?
Yeah, what's going on? I have a question.
Yeah, go ahead.
So, I know I sent you a message on the Telegram. So, I'm still kind of playing around with this and trying to learn it. So for example, and that last time I was playing, I can't remember what company I was playing with, and I went to buy, and then I went to buy call, and then after I went buy put. But my question is, the color you said don't matter, right? Because when I went in the color, it was red for both, and then for other ones, like when I go when I do the put, it will be green, and for other one when I do the put, it will be red, and then for vice versa for the call as well. Does that really matter the color wise, or it doesn't matter at all?
Yeah, so what happens is it's the current price what you're looking at. So when it's red and green, that's based on the current price compared to the stock and sometimes compared to the actual contract. So at sometimes one contract might be more valuable than the other one, even though they might both of them be out of the money or in the money or whatever the case may be. The price of the contract, sometimes the actual the Greeks will have an effect on that. Open interest, all that type of stuff is taken into consideration. But the numbers the colors are going to fluctuate according to the current price. So if Workhorse opened up at $16.07 today, and then it dropped to 1606, then it's going to be red. But that doesn't, you know what I mean? That, and then it'll go up to like 1650, and now it's green, and then it'll go down to 1648, and then it's red. But I mean, it's still green for the day because it's higher than where it opened up at. But at this particular moment, it's red because now it's down. You could look at it like candles. So if you open up your chart and you see the candles, the price might open up green, you know what I'm saying? And then for the next 4 hours, it might be red. Then for the next 4 hours, it might be green. You just got to look at it like that. So you almost got to look at these colors right here as if they're candles somewhat, because they're going off of the current price of where it's at, but it's not necessarily meaning that it's a good thing or a bad thing. It just means at the moment. You understand what I'm saying? Better example, like if we go down to a 1 hour, 1 hour time frame, you understand that every single candle on the 1 hour time frame is representative of 1 hour. So each candle is 1 hour. So yeah, price will let me see. Price will open up here and it'll be red, then it'll be red, and then you open up your options chain and it'll be green. But it's still a red day because the price is still going down. But it's green right now. You see what I'm saying? So that's why I say don't pay too much attention to the actual colors, because that's representative of the current price, not necessarily if it's a good thing or a bad thing. Just know what you're doing and know what price point you want to be in, what entry you want to be in. All right.
Yeah. Okay. Thanks.
Yeah, no problem. Who's that? Brenda.
Yes, hi. So I have a question about when you buy 100 shares at a discount, and I think that was the naked put strategy.
Yeah.
Okay.
Okay, yeah.
So I was looking at ExxonMobil, because it looks like they are kind of at a low based on like a year, and then they have pretty high dividends. So I wanted to try to get in, but in looking at the chart, it looks like they're on an uptrend. So would this be a good one to try to get in? And I don't know.
All right, so for as far as you're talking about the naked puts, right? The naked put strategy.
Yeah.
All right.
Yes.
So for naked puts, with naked puts, you want to use naked puts as an opportunity to either make cash flow up front or to actually get into a stock. But to me, if you actually want to invest in a stock, I wouldn't necessarily use a naked put to do that, because what you're doing is you're hoping that the price meets your strike. So if you want the price to meet your strike and you want to make cash flow, then what you're going to end up doing is you're going to end up buying a contract with a strike price that's actually below the share price. So essentially what you're asking price to do is to come down to meet your price. To me, I don't think that's I mean, a lot of people do that and they're successful with it, but I don't see why you would do that. If you actually want to own the shares, I want the shares to continue to go up. You know what I mean? And I want to actually buy them. So when I get into naked puts, I get into naked puts just specifically to make money. So if you want to make money off of Exxon and you think it's going up, then yeah, you can get a strike price down here and make you some good money. If you want to make more money, you can get it up here. But at the same time, why would you want to promise someone that you're going to pay them more than where they're actually trading at now? Because if the share price actually does meet your strike and you're up here, then you missed the opportunity to buy it cheaper and you could have got all that gain on the way. You understand
Okay,
what I'm
I
saying?
got. Yeah, thank you.
So if you really want to get into Exxon, then I would suggest that you just go ahead and buy a call and get at a strike price that's lower than where it's at now. And that way, if the price continues to go up, you walking into equity and cash flow.
Hmm.
Okay. All right.
Right.
Thank you.
Yeah. We got Daryl.
Yeah. I'm new to this whole thing,
Yeah.
but I was just wondering what platform am I supposed to be using, and what's a good amount to start and to jump in with?
As far as the platform, what you're looking at now is Robinhood. So, I mean,
Okay.
I'm using Robinhood as an example of what you can start out with, easy beginner's platform to use. But all the strategies that I teach, you can use with any platform. So if you don't like Robinhood or you got something else going on, you can actually use these strategies with whatever brokerage account you want. Just make sure that you have options trading enabled on your brokerage account. And as far as the amount of money that you need, that's solely based on you. I suggest that you go and tap in to lesson number 2, class number 2, so that you can understand risk management, because that's something that you need to figure out on your own. I can't really tell you how much to come in with.
Okay. All right. Thanks.
Yeah, no problem. Country 75.
Can you hear me?
Yep.
So, I mean, the last guy just pretty much asked the same question. I only have like $1,000.
Yeah. I mean, it depends on, if once you get through the lessons, you'll have different strategies that you can use. Some people are like, all right, well, I mean, I want to just make some money real quick. Let me see if I can get a call or a put or whatever the case may be and make some profit off of that. And they're cool with that. Some people don't want to be as risky. They want to use the strategy that I just went over with the naked puts. You could use $1,000 of collateral to purchase a contract and get paid cash flow for that, and not actually have to own the shares and just wait for the contract to expire. And then you take your premium and then you keep your 1,000, and now you're doing that. Or you could do the spreads to where you have your $1,000 in collateral and you're just making cash flow off that. Or, it's so many different strategies that you can use. You really just got to get through the lessons and decide which one resonates with you the most, and then focus on that. But as far as the amount of money that you have, if you have $1,000 that you're willing to lose, because that's essentially what you need to be thinking about. You need to be thinking about how you're going to feel if you lost all of your money. If that number is $1,000 and you're comfortable with that, then cool. Now from there, you have to decide how much you're willing to risk per trade. So in class number 2, we talked about risk management, which allows you to have at least some set rules. So say, okay, if I got $1,000, then I'm only going to risk 2% of that. So I'm going to take 2% of my $1,000 and I'm going to put that towards a trade. And then I'm going to hopefully grow that money. And if I can grow that, all right, cool. I'll take my growth and I'll add that to the other 800 and then I'll take the 200 and do it again. Take the 200 and do it again. Take the 200 and do it. So you can do it like that, or you could do more, be more risky with it. It's up to you. But class number 2 will break that down to where you can protect yourself, because the name of the game is staying, you want to stay in the game as long as possible. If you take that whole 1,000 and you put it into a trade and you lose, you ain't gonna be trading no more. So you got to be strategic about how you use that 1,000, and so you can keep your money and have some available. So if you lose 1, 2, or 3 times, at least you're still able to continue to keep trying. And then when you finally win, you'll be able to get back on your feet. But you can't just put the whole 1,000 up like that. You know what I'm saying? So you definitely need to tap into class number 2, so you understand how that whole thing works. Who else we got? Heaven?
Just one more question. For when you're doing a sell call or a sell put, you should be out of the money, right?
Hold on 1 second. 1 second. All right. You said, so if you're doing what now?
A sell call or a sell
Yeah.
put, you should be out of the money.
Yeah. So again, if you're in puts, you're in the money is actually above the strike price. If you're on calls, in the money is below the strike price. So if you're selling the put, you're using your own cash as collateral, and you're taking the premium up front. You want to make sure that you are below the strike price, so that way you don't get exercised. All right. So you want to be down here. If you're selling your call, that means that you already have the shares and you want to use them as collateral to collect premium. If you want to keep your shares, then you want to go out of the money and you want to make sure that you're up here somewhere, hoping that the strike price doesn't actually meet and go that high. So that way you keep the premium and you keep your shares. If you don't want to keep your shares, then you can be closer to the strike price, okay? Or even below it if you want to, and then you collect premium that way. So just make sure, just instead of saying in the money, out of the money, in the money, out of the money, just use the prices as a reference. So if you bought some shares and you want to get rid of them, you obviously want to get rid of them for more than you bought them. So if you bought shares at $56, then you want to sell them for 57 and up. All right. So if you're on sale call, then that's where you want to sell them for. If you don't have shares and you're looking at the share price and you think the price is going to go up, then you want to stay below this price and you want to get a strike price under here, so that way you can collect premium and not have to worry about actually exercising your contract and taking those shares. All right. So just think about the actual price, not necessarily the phrase, because sometimes in the money, out of money confuses people. If you want to keep it simple, just think about the actual price. How much do I actually want to buy something for? I want to get a deal. I want to spend less money than what I have to. You know what I'm saying? If I think the price is going to go up and I just want to collect cash flow, then I just want to collect cash flow. I think the price is going to go up, then I want to get a price that's low. You know, so you essentially what you want to do is you want to just make sure that you're going you're buying something for less, or you're selling something for more. All right.
Thank you.
No problem. Brenda?
No, you already got me.
Okay. Who else we had? Paige?
Hey, my question was for when you are buying a call and your stop loss, do you do that when you actually buy it in the app, or is that just we monitor based off our charts?
Well, actually, Robinhood has updated their situation to where you can have stop losses. I've never used it before, but what I teach is just to keep everything like smooth and making sure that you are keeping stuff like uniform. I suggest you just go ahead and use TradingView, because you can set your alerts here. So when we start getting into, you're not supposed to be getting into no trades if you can't do technical analysis anyway. So since you're doing technical analysis, you're already on the chart and you're monitoring the chart probably even more than you're monitoring your Robinhood account. But if you want to get into a trade, you know where your strike price is at. So you mark your strike price. And then you also using the options profit calculator so that you can see all of the possibilities. You can see what kind of profit you're going to have if the price goes up to a certain point. You're going to see how much you could potentially lose if the price drops to a certain point. You have to figure out how much you're willing to lose based off of the options profit calculator. So that way you can take that strike price and then bring it over to the chart and mark that. And then you can set your alerts around that. If you want to set your alert right at that price, fine. If you want to set your alert a couple cents or whatever before that price just to alert you, fine. But that's essentially what you're doing when you're setting your stop loss on the TradingView chart. You're just setting the alert to let you know that price has reached a certain point. So that way you can go to your brokerage account and get in or get out or whatever the case may be. You're able to react based off of that. Because even if you you could set if you could set your stop loss on Robinhood, then cool. But if not, you're not gonna know what's going on unless you're just staring at the price all day, and everybody ain't got time to do that. So that's why I suggest using TradingView. And if you have your phone, TradingView has an app as well, so you can put the app on your phone. You can send an alert to your email, your text, and your actual app. So if price hits your alert, then you hear a sound or you get notified, and then you can react. But that's essentially what I mean when I'm talking about stop losses. Just putting some type of alert there to let you know that price has gone against you, and it's time for you to get out of that trade and take your losses.
Okay, thank you.
All right, no problem. All right, we got one more, and then we're gonna start this lesson. Esco. I can't hear you. Oh, okay. So I don't have a mic. When you sell a call option, what is the average time it takes to sell? Close with a lot of volume. Is there an option to do a market sell so it goes quickly, especially with so much volatility in the stock? For example, I have a workhorse option and it went up $2, so I'm at $300 profit. I want to get rid of it now. So if I close or sell, will it sell right away at the 300 gain, or is it sitting out there allowing itself to go down $1 or more while I'm waiting for someone to buy it? Also, can you show us how to do a stop loss on the call option? Thank you. All right, so we just went over the call stop loss stuff, but as far as your market executions and all that, when you have an option contract and you want to get in or get out, first of all, you got to make sure the market is open. All right, volume is very, very important. If there's not a lot of volume for the specific security that you're into, then you might have trouble getting out of the trade. That's why I say it's very important to figure out what the volume is looking like. As far as Workhorse is concerned, you shouldn't have no issue getting in and out of Workhorse. It should be plenty of volume for you to get in and out of Workhorse. If you decide to sell your option and it doesn't get executed right away, then that means that you probably need to adjust your bid-ask spread. All right, so the spread, the price in which the person is willing to buy it from you and the price that you're willing to sell it for is a spread. When the market first opens, a lot of times the spreads are going to be super wide because there's a lot of volume, a lot of trading, and a lot of price fluctuation. So the spreads are going to be wide. Sometimes you're going to see like a $1, $2, $3, $4 spread depending on what security you're looking at. So what you want to do is you want to be on the side of the buyer or you want to be on the side of the seller, depending on what side you're on. So if you're trying to sell something, then you want to get your price closer to the buyer. And that will ensure that you get executed as fast as possible. All right. If you try to keep your bid-ask spread in favor of yourself, then sometimes it will take a while for your contract to get executed. All right. So that's if you're having troubles with getting executed and stuff is just stuck pending, either the market is not open or your bid-ask spread is too wide and you need to go back and change it. All right. And as far as setting up your stop losses and stuff, I think I went over that on the technical analysis class. That was class number 4, right? No, class number 3. Class number 3 was good, and I can do another video for that and put it into the daily analysis videos or technical analysis class material if y'all need me to do that, but I need to start getting into this lesson. Let me look at this chat real quick. For a call, depends on your game plan, swing trade. Should I keep it to the ask? All right, so what's that? Okay, cool. All right, so we're good. Miguel, last question. Miguel, go ahead.
Hey,
My bad. Unmute yourself.
can you hear me now?
Yeah, I got you.
Awesome. I think I need some clarity on like exercising an option and closing an option, right? Like, is there a difference in terms of what you have to pay out? Like, and also, I guess this is a second part of the question is the option I bought went down during the weekend, which I'm a little surprised because I figured the market's closed, right? So,
All right.
so yeah. So
Yeah, okay. So as far as exercising the contract is an agreement. So what you're doing is you're agreeing to do something by a certain date. All right. So when you exercise the contract, that means that you're going to fulfill that agreement. So if you have a buy call option, you're agreeing to purchase 100 shares of Exxon for $54 by March 5th. When you exercise the contract, that means that you're fulfilling that obligation. So you're going to go ahead and purchase those shares at this price. If you don't want to exercise it, then you need to sell it. All right, which would be closing the contract. All right. So when you close the contract is when you actually get rid of it and get out of the trade by selling it to somebody else. But when you're exercising it, that means that you're fulfilling your obligation that you agreed to. All right. Same thing if you're selling the call, or if you're selling the call and you have the shares, exercising the contract would mean that you're actually selling your shares. You know what I'm saying? By the expiration date, you're giving them away. You're selling them to somebody. If you're selling the put, exercising the contract would mean that whoever on the other side, they're actually going to sell their shares to you for this specific strike price. All right, that's exercising the contract. So
I would have to essentially be responsible for $5,400 in this case.
In this
right?
case, you have to have the $5,400 in your account in order for you to even get into this trade. They won't even allow you to get in it.
I would have done that.
You have to have that in your buying power.
Okay.
Yeah.
And then in terms of the what do you call it? That's as a put, but if I did it as a call, am I still responsible for the $5,400 or?
If you're selling the call?
Yeah.
If you're selling the call, you have to have the shares. So you have to have you have to have 100 shares for each contract if you're selling the call. If you're selling the call, that means that you want to sell, you want to give somebody else the opportunity to buy your 100 shares from you at a specific price that you agree to.
And that would be in their favor if I bought it at a lower price and in the market is higher.
It would be in their favor if they purchased them from you and the strike price that they agreed to is actually lower than the share price that it's at. So that would be in their favor. Yeah. And
then the reverse is in favor of me because obviously I want the stock market price to be higher.
Yeah.
Because I'm getting the profit.
Yeah. You want to always sell for more than what you purchased them for sure.
Right.
Yeah.
And then on the reverse side that you were just saying in terms of the put, if I bought it at a price higher than what's at the market, so I'm making the difference there, right? In the reverse.
In this case, you're not buying anything. In this case, you're getting paid for the opportunity to take somebody else's shares that they don't want. So you're on the other side of the equation. So in this particular case, you got your money ready and you want to purchase them at a specific price by a specific date. But if the price doesn't meet, if the share price doesn't meet your strike price, then obviously I'm not going to sell you. So I'm not going to sell you something for less than they're worth unless I have to. So for instance, all right, let's look at it like this. if I have 100 shares or something and I want to get rid of them on the call option, I obviously want to get rid of them for more than I purchased them for. All right. But on the occasion of a put, you don't know how much that person paid for their shares. You don't know this. All you know is you're going to agree to pay for them at a specific price. Let's say you said $54. I'm willing to buy them for $54. Because I want to get rid of them, I have to pay you money up front. All right. So I'm going to give you $107 up front just for agreeing to this contract. All right. If the share price goes all the way down to $52, then best believe this contract is going to get exercised. Because if I wanted to let them go for you for $54, then I'm definitely going to let them go now, because now they're worth less than that.
Right.
So you end up losing money because the share price actually went below your strike price. Now you have to take on some shares that aren't worth the amount of what you paid them for.
I would have to pay that difference too.
Well, your $5,400 was already in collateral, so that's gone.
Gotcha.
So now you just took on some stocks that you're in the negative.
Got
So
it.
that's why I said if you want to actually purchase some shares, I wouldn't use a naked put option to do that. I would just use this option to make money. So in this particular case, you're agreeing to purchase them at $54, but you know, because you use technical analysis and you've seen how this thing is looking on the chart, you know that the price is not going to go down. You know the price is going to go up. So you know that you're not ever going to get exercised unless something crazy happens. All you're doing is just collecting this $100. And then once March 5th gets here, and this share price is still above your strike, then this contract just disappears in your account, and that $107 is just remaining, and then that $5,400 that you had as collateral gets released and gets put right back into your buying power. You got it?
Thank you. Appreciate that. Yeah.
All right, no problem. All right, let's go ahead and get into this lesson. So, trader psychology. All right. The importance of trading psychology. Okay. As you all know, I briefly just went over it. Basically, everything is based off of emotions. You understand the market that you're in is controlled by or dictated by people's emotions and how they feel about the market and how they feel about the economy and how they feel about everything in general. All right. What you want to do is you want to have at least some rules. You want to have some principles. You want to have the information. You want to have as much as you possibly can to help you stay on an even keel with your mind so that you're not affected by anything that happens, regardless if you're winning, regardless if you're losing. If you wake up in the morning and you made an amazing trade and you won $10,000, you can smile, but don't get too cocky because the market will humble you. So you don't get too excited about it. And if you turn around and you lose $1,000, you can't beat yourself up about it, because at the end of the day, you have absolutely no control over what happens in the market. All this information that we're teaching you is to help you minimize your losses and help you minimize the risk that you take on by using technical analysis and fundamental analysis so that you could at least be confident in what you're doing. But at the end of the day, all this stuff is speculative and things can go completely wrong. You still got to stay in. You got to keep a level head. All right. So we're going to go through all this and break this down. Many skills are required for trading successfully in the financial markets. They include the abilities to elevate a company's fundamentals and to determine the direction of a stock's trend. But neither of these technical skills is important as the trader's mindset. Containing emotion, thinking quickly, and exercising discipline are components of what we might call trading psychology. There are two main emotions to understand and keep under control: fear and greed. All right. Snap decisions. Traders often have to think fast and make quick decisions, darting in and out of stocks on short notice. To accomplish this, they need a certain presence of mind. They also need the discipline to stick with their own trading plans and know when to book profits and losses. Emotions simply can't get in the way. All right, key takeaways. Overall investor sentiment frequently drives market performance in directions that are at odds with fundamentals. The successful investors control fear and greed, the two human emotions that drive sentiment. Understanding that can give you the discipline and objectivity needed to take advantage of others' emotions. All right. Basically, what that means is, depending on what side of the market you're on, you know that there's other people who can't control their emotions. This is the reason why we have crashes. There's nothing there that tells us that the market should just drop. It's all purely based off of emotion. So if you know that a COVID-19 announcement is going to make the stock drop, or the president announcing something specific is going to make the stock drop, you know what other people's emotions are going to do. Other people emotionally trade and they're going to go and sell off their holdings because they don't know what's going to happen in the future. But now that you're equipped with the knowledge, you know how to take advantage of other people's emotions. It might sound crazy, but that's essentially what the market is. And anyway, you're taking advantage of controlling your emotions against people who can't control theirs. All right. Understanding fear. When traders get bad news about a certain stock or about the economy in general, they naturally get scared. They may overreact and feel compelled to liquidate their holdings and sit on the cash, refraining from taking any more risk. If they do, they may avoid certain losses, but may also miss out on some gains. Traders need to understand what fear is: a natural reaction to a perceived threat. In this case, it's a threat to their profit potential. All right. Quantifying the fear might help. Traders should consider just what they are afraid of and why they are afraid of it. But that thinking should occur before the bad news, not in the middle of it. Fear and greed are the two visceral emotions to keep in control. So when we talk about setting your stop losses and your take profits before you get into the trade, my man said he had $1,000 to invest. What is your fear? That's why I specifically asked, how are you going to feel if you lose that whole $1,000? You have to understand that first. If you know that you're going to drive yourself crazy by losing that, then that means that you don't need to put that much at risk in the first place. If you turn around and lose $100 of that 1,000 and you're not going to feel so bad about it, then you just minimized your fear. Now you can trade fearlessly. And then you just stick to the technicals and the fundamentals and you ain't got much to worry about. All right, now it's just a learning experience. You can just put it into your notes and learn from the loss or the gain or whatever happens. By thinking it through ahead of time, traders will know how they perceive events instinctively and react to them and can move past the emotional response. Of course, this is not easy, but it's necessary to the health of the investor's portfolio, not to mention the health of the investor. All right. Overcoming greed. There's an old saying on Wall Street, the pigs get slaughtered. All right. This refers to the habit of greedy investors have of hanging on to a winning position too long to get every last tick upward in price. Sooner or later, that trend reverses and the greedy get caught. Greed is not easy to overcome. It's often based on the instinct to do better, to get just a little more. A trader should learn to recognize this instinct and develop a trading plan based on rational thinking, not whims or instincts. A lot of people made a lot of money off Tesla. I always talk about Tesla because it's just a great example to use. The price went from whatever it went to all the way up to $800. We all knew, as investors, we all know that that's a ridiculous price point for that company. Greed comes into play now, because when the media is telling you that everything is cool and Elon is on Twitter telling you everything is cool and you looking at your portfolio and you seeing all those gains, you never set a take profit before you got into that trade. You just got in it and then you made some money and now you're staying in it. But why are you staying in it? Are you staying in it because you're really, really faithful about what's going on with the company? Most of the time people aren't. Most of the time they don't even care about the inner workings of the company or what they got going on or none of that. They just looking at their portfolio and seeing all the money they made. Then the price just dipped like $200, $250 the past couple of days or the past week or so. A lot of people was pissed off about that. But at the end of the day, if they wasn't being greedy, they would have got out of that. They would have got out of that a long time ago. because most of the people that are investing in Tesla they're not even really invested in the company long-term anyway. They're just in it because they don't know how to pull out. They see that they made $1,000. They like, shit, if I made 1,000, I could probably make 2,000. All I gotta do is stay in. The price gonna keep going up. No, the price has to come down at some point because the stock is already overvalued. And if it hasn't had a dip yet, then it's gonna be a dip in the future. How are you gonna be able to handle the dip? Well, you don't have to worry about that if you already had a take profit set before you got in. If you had a take profit set before you got in, you would have took your profits and you would have got out of there. All right, so that's just trying to protect yourself from being greedy. A lot of times when we talk about trading and we go over some of the technical analysis stuff and I pull up these charts and I show you where my profit targets are at, I make it a very clear point to let you know where my take profit is at or where my profit target is at, because I need you to understand that once price hits this point, I'm done. I don't care what happens after that. If it goes $50 beyond my take profit, I'm not going to beat myself up and say, damn, I should have stayed in. No, because at the end of the day, my whole goal was to make money, not lose money. My profit target was hit. I made money. I'm happy. I'm out. That was a successful trade. I'm moving on to the next. I'm not sitting here worried about what if and what could have been if I'd have stayed in or put more money or did this or did that. No, I have a trading plan. I stick to it. I put my money in. I have my profit target. My profit target was hit. I got my gains. I got out. I'm moving on to the next one. All right. Get over the greed. Don't get too greedy. Basic candlestick patterns. Candlesticks are created by up and down movements in the price. While these price movements sometimes appear random, at other times they form patterns that traders use for analysis or trading purposes. There are many candlestick patterns. Patterns are separated into bullish and bearish. Bullish patterns indicate that the price is likely to rise, while bearish patterns indicate that the price is likely to fall. No pattern works all the time, as candlestick patterns represent tendencies in price movement, not guarantees. I gave y'all a few things that you should print out if you haven't, PDFs, a candlestick cheat sheet, candlestick pattern cheat sheet, a chart pattern cheat sheet. Okay, I got 2 of those now. I'll put them up in a second just so y'all know they're there and what they look like. All right, use them. All right, use them because they're going to help you see where the market is going. Obviously, it's not all guaranteed, but it can help you minimize your risk and minimize your losses and potentially maximize your gains, because this stuff wasn't just created yesterday. This stuff is people base their sole portfolios and entries and exits off of these patterns and these off of these candlestick patterns and off of these chart patterns. They work. You know, obviously it's not a 100% thing, but I would say probably 70, 80% I've seen success using them. So definitely use all the tools necessary. Setting rules. A trader needs to create rules and follow them when the psychological crunch comes. Set out guidelines based on your risk reward tolerance for when to enter a trade and when to exit it. Set a profit target and put a stop loss in place to take emotion out of the process. In addition, you might decide which specific events, such as positive or negative earnings release, should trigger a decision to buy or sell a stock. It's wise to set limits on maximum amounts you are willing to win or lose in a day. If you hit the profit target, take the money and run. If your losses hit a predetermined number, fold up your tent and go home. Either way, you'll live to trade another day. So that's back to what I was talking about. You know, whatever your risk management is, however much money you have in your trading fund. All right, if you're doing the 1% rule, 2% rule, or 100% rule, however you maneuvering out here, you just want to put yourself in a position to where you live to trade another day. All right, don't put everything at risk. I don't care if you feel like it's a short bet or not. Don't let your emotions, don't let your ego determine where you get in and get out of the market. Stick to the fundamentals, stick to the technicals, set your stop loss, set your take profit, and take your emotion out of the trade. All right. Even if you're losing the trade, don't beat yourself up. Just look at why you're losing. Figure out why. Figure out what happened. What news article dropped? What happened? The CEO said something? What happened? Why isn't this going the way that I thought it was going? You take that information, you notate it, and then you carry that on to the next trade. But you don't beat yourself up about it, because at the end of the day, none of this stuff is up to you. All right. Only thing you can do is get in and get out at the right times. That's all you can control. But do it without emotion and do it without ego as much as possible. Setting rules will allow you to do that. Conducting research and review. Traders need to become experts in the stocks and industries that interest them. Keep on top of the news. Educate yourself. If possible, go to trading seminars and attend conferences. Devote as much time as possible to the research process. That means studying charts, speaking with management, reading trade journals, and doing other background works such as economic analysis or industry analysis. Knowledge can also help overcome fear. Now, I understand that everybody is not going to be in a position to where they're just becoming this expert analyst and looking at news all day, every day. But you have to manage your time, I would say. We all got 24 hours in a day. Some people that was in the group chat saying that they've been losing sleep since they got into this course, because now they want to stay up all night and look at different stocks and look at news and try to figure out what positions they want to get into for the next day or the next week, whatever the case may be. You don't have to take it that far. I gave you a way to invest into the market passively in class number 4. You can take that route and make it easier on yourself if that's what you got to do. But whatever stock you decide to invest in long term, the brokerage account that you have is going to make your life a little bit easier, because they're going to filter out the news determining what you have in your portfolio. All right. So for instance, if you have a TD Ameritrade, if you have some Exxon stock, some Apple stock, some whatever, Johnson & Johnson stock, they're going to filter out the news pertaining to those stocks, and they're going to put them on your homepage. So that way, if you just wake up in the morning and you want to check your portfolio, you'll see the news is right there. Also, you got Black Stocks Tube, you got Yahoo Finance. I put you on the Simply Wall Street, Wall.Street. You got Morningstar, you got Business Insider. You got all these free media outlets that you can use to help you. And they pretty much all of them have a watch list on there. So you could put a watch list together and then have the news there. So that way you stay up to date on what's going on with the companies that you're invested in, whether long-term or short-term. Just do whatever you can to inform yourself. Again, most of the people that are invested in the stock market, we all relying on the same news. All right, we all relying on the same news. Only the people that are insiders know what's really going on before the news has the information. So don't feel like you're out of the loop. You just pick whatever news media you want to stick to and just stick to them. But stay in tune as much as you can. You know, that's all I could tell you about that. Stay flexible. It's important for traders to remain flexible and consider experimenting from time to time. For example, you might consider using options to mitigate risks, is what we focus on. One of the best ways a trader can learn is by experimenting within reason. The experience may also help reduce emotional influences. So the more you do, the less emotional you become. You know, it's just part of the game. Finally, traders should periodically assess their own performances. In addition to reviewing their returns and individual positions, traders should reflect on how they prepared for a trading session, how up to date they are on markets, and how they're progressing in terms of ongoing education. This periodic assessment can help a trader correct mistakes, change bad habits, and enhance overall returns. So what I'm about to do right now is I'm about to go through some of the stuff that we have in the back end for you to make sure that you are using everything that's available. All right. And I appreciate the members in the in this course in the Telegram group who ask questions about certain things and suggest certain things, because all it's going to do is help all of us get better and get sharper. So I added this stuff a few days ago, but I'm gonna just make you aware of it now. So this is the back end, right? Everybody knows what this looks like. All right. Course materials. Okay. We can go all the way down to class 5, 4, 3, 2, 1. All right. So class 4. All right. Here is where all of your anything pertaining to class 4 as far as the dividend stuff. I'm going to update the dividend aristocrat list. and I'm going to update the Dividend Kings list probably tomorrow. All right. For the people who's trying to figure out about the indicators, what indicators to use, we have the indicator checklist back here now. Okay, let me pull it up so we could all see what it looks like. Give me 1 second. 3. All right, indicator checklist. All right, so for the people who are trying to figure out how to get their charts to look like mine and what indicators I'm using, this is the indicator checklist. Okay, you can go through this checklist and make sure you have these indicators: moving averages, pivot points. I know a lot of people had questions about that. All right. As far as the type that I have, I use Woody, but it doesn't really matter which one you use. I adjust the type of pivot point depending on the actual security that I'm looking at and how it responds to support and resistance. All right. So you can go and fluctuate. As the Fibonacci one, there's a whole bunch of different types that you can program for the pivot points. I use Woody because Woody just seems to be the most one that the best one that responds to price response to support and resistance a little tighter with Woody, in my opinion, for most securities that I'm using. And I use that with Forex as well. So that's there. And then RSI and the stochastic. All right, that's pretty much what I use. That's pretty much what I stick to. I don't really go too far into all the other indicators for the most part. I just stick to this basic stuff. And then I use, my strategies within that. So that's the indicator checklist. That's back here, okay? Put credit spreads. We went over this a few times. Videos here to help you with that, all right? And then I'll add some more stuff to it. But I specifically put credit spreads in class number 4 trading materials because this will help you gain more cash flow to allow you to buy stocks. So the whole point of me teaching you options in general was to help you make money, just another source of income, all right? But the point of me having you make more income, not to live off of specifically, but to put you in a position to where you had money, extra money, to invest for long term. So if you don't want to go crazy and use the earnings call strategies and come in and out and do 10, 15 trades in 1 week or whatever, you can just keep it simple and go with put credit spreads, but just be very, very strategic about when and how you use them and how much money you put at risk, all right? So if you wanted to just keep it simple and just stick with SPY and just do put credit spreads and call credit spreads, you can do that and never have to trade options with calls and puts and all the other stuff. You could just make money off of spreads and just stack your money up and then use that to buy into dividend paying stocks and build your portfolio if that's what you wanted to do. So I put that there for a reason. And then you can also use the naked puts and use that for income as well. Just be careful. Class 3 course material. All right. So let me pull this up. I have the indicator checklist. All right, I probably should move that to class 3. All right, but I added this too. All right, I added this chart patterns cheat sheet because I spotted a double top on something last week and I realized that the original cheat sheet that I put up there didn't have double top, it had double bottom. So I updated this. All right, print this stuff out. You know what I'm saying? Put it on your wall, do something, so you can see it because these patterns happen. When you're doing technical analysis, you're going to see these patterns and they're going to help you minimize your losses and maximize your gains because you're going to know what could potentially come up when you spot these patterns. All right. So this is here. Okay. Then you have the original one that I put up in there. And then I also added trading notes. All right. So you could print this out. You could print 1,000 of these out. You know what I mean? And just so that you hold yourself accountable and then you know what it is that you're doing. Because some people jump into trades and they don't take no notes. I don't understand that. I don't understand how you think that you can do all this in your head. You need to write this stuff down or type it down or whatever you got to do. You have to document this stuff. All right. If you're not cool with just having a notepad and writing everything down, you need something a little bit more standard or whatever, then you can use the trading notes. So that way you can fill out all these columns to give yourself confidence so that you know what you're doing. If you got the notes in here and you're giving yourself clear reasons as to why, why you're getting into a trade or exactly what you see, you basically just writing down what you see. What is the daily direction? What is it doing? What do you see? Do you spot a pattern? Do you see candle patterns? 4 hour, what do you see? 1 hour, what do you see? 15 minute, what do you see? All right, and then from there, you can start plotting on your entry. I added an entry checklist, all right? That's in the back end as well. So now you can go down the checklist and check off all the things that you see and how they responded to them, all right? Is it an extension or a retracement? You make that decision and then check it off. What's the trend? Uptrend, downtrend. Okay, check it off. Does the Fibonacci fit on there? Yes or no? Check it off. Do you see any chart patterns? Check it off. Do you see any candlestick patterns? Check it off. What is the RSI looking like? Is it overbought, oversold? Check it off. What is the stochastic looking like? These are all the indicators that I use, all right? And then scroll down to the 4 hour chart. This is part of top-down analysis, getting you in position to get into a trade at the right time, all right? Minimizing your risk, okay? And putting yourself in a position to maximize your gains. Go through all this stuff, mark it down, scale down to the 1 hour chart. Same thing. Now we're starting to work with pivot points, all right? Do you see support and resistance without the pivot points? Do you see support and resistance with the pivot points? Are the pivot points being respected? How did price open up, above or below the pivot points? Utilizing all this stuff will help you gauge whether it's a good trade to get in. Is it the right time or not? All right. So you got your trading entry checklist. Okay. You got your trading notes. All right. You got 2 chart pattern cheat sheets, and you have a candlestick pattern cheat sheet. All right. What else? All right. So, and then we have the fib retracement tool demonstrations. I'm pretty sure a lot of y'all missed these. Okay, because there's some people who still trying to figure out how to put their fib on the right way. Go through these. All right. So we got the Fibonacci retracement tool demonstration here. Then we got long entries using the pullback watch list. I know a lot of y'all probably missed that class, but the Yahoo Finance pullback watch list. If you're trying to find that, go to your options trading resources, and that's there. All right. And that's there. Let me pull up the resources list. All right. And then we have the videos for the top-down analysis, how to analyze a stock from the weekly or from the monthly to the weekly to the daily, all the way down to the 15-minute before you get into your trade. All right. And then we got the analysts getting down to the 15-minute for good sniper entries, to where you could get in the right time, like a sniper. All right. Long, short entry signals, some signals that help you determine on when is the right time and when not to. And then your options trading resources are here. Okay. So a couple of things that I added. These are the cheat sheets here. All right. Take you right to those. I added the dividend reinvestment calculator that we went over in class 4. Okay, that's there. All right. And then the pullback screeners, like I just talked about, the list that comes on Yahoo Finance, to where you could find potential pullbacks in stocks. So when they give you the worst performing stocks of the day, then you take that as a sign for you to start looking for entries possibly, because that's basically what they're saying is these stocks are pulling back for the day. You want to see how big that pullback is. Is it just starting? Is it something that's been going on for a month? Is it something that's been going on for a couple of days? Is it pulling back on a bullish market or a bullish trend, or is it pulling back? You know what I'm saying? You can determine that after you get the list and look it up on the chart, and then you can combine your news and see what's up, and then you can see if you have a potential entry or whatever. So that right there and then the book recommendations. I'll probably add another book to this. I sent the screenshot for a book into the actual Telegram group. What was it? It was Mastering the Market Cycle by Howard Marks. Definitely take some time out and read that book. It's an easy read. I know some of the terms might be a little bit deep, but he breaks it down pretty good. It's a very, very good book to help you understand what the signs are for the market cycle. Because we want to be able to determine, we want to be able to judge the temperature to see where the market is at. Is it about to be a crash? Is it about to be a dip in the market? Are we on a phase to where things are going to continue to rising up? That book pretty much breaks down all the tendencies of what happens when the markets are in their cycles and what drives the market cycles. It explains exactly what's going on inside the market, all the different variables that are taken into consideration when the market is fluctuating like the way it is. You feel me? So Mastering the Market Cycle by Howard Marks is definitely a good book. I'll add this to the list probably by the end of the day. All right. So that's pretty much it as far as the psychology class. Just wanted to make sure y'all saw everything that's back here. And then obviously we have the daily analysis videos that will continue to be updated. All right. So everybody that signed up for this course is going to have unlimited access to this information. I'm never going to disable this. So as long as you keep your password and whatnot, you'll be able to keep in tune with this stuff. And also we have the VIP class that's open now. All right, so if you guys want to stay in tune and continue with these Zoom calls and continue to get these analysis videos and communicate with me and the people in the group, and if you need further teachings and further, mentoring or whatnot, definitely go ahead and sign up for the VIP group. All right, I already put the link in the actual chat, so if you don't have it, you can scroll up and find it in there, and then I put it in the Telegram group as well. I'll open it up for questions if y'all have any. Go ahead and raise your hand if you got any questions. This has been great. Thanks so much. Brenda, thank you for joining. I appreciate y'all for joining. TJ, go ahead.
Yeah, man, real quick, because you just said something that sparked my brain. Just about how the news and stuff dictate stuff.
Yeah.
And just going back to the workhorse, like at the beginning of the week, the news was good. It was a good buy. At the end of the week, it was a bad buy. But, excuse me, the earnings is coming out in the morning before the market open. And I'm wondering, do you think that news of it being a bad buy drove it down because the earnings coming out?
Let me pull up the chart real quick so I can see. All right.
Because all the news in the beginning of the week was like, it's a good buy, it's a good buy. And then Thursday, it was like, well, no, it's a bad buy.
Yeah, so this is the thing, right? When you're looking at trying to get into a stock, that's why it's very important for you to look at the chart so you can see where it's going. This big red candle right here, this was on the February 23rd. What day was February? February 23rd was Tuesday. All right. So on Tuesday, you had this huge sell-off. All right. When I see a huge sell-off happen in one day that crossed the 50 and the 200, and it came down and surpassed a major support level, I'm probably not even going to mess with that, because this happened too close to the earnings call. The earnings call is 3 days after, 3 days after this actual sell-off right here. I wouldn't even be trying to put my money into this specific security because it's too many sellers. So in order for you to feel confident in coming in for a buy position, you need to have enough buyers come in to basically engulf this whole entire huge selling candle for the day. You feel what I'm saying? So you have to go, when I'll be saying the trend is your friend, the trend is your friend, the trend was here. The trend was here. The trend was here. Once the sell-off happened, the trend was broken. There is no more trend. So now if you're still trying to get in for a buy position, it's almost like you're going against the trend at this point, because at this
Yeah.
point you scale down and you start looking at it like, well, shit, the 50 moving average look like it's about to cross the 200 now. You about to be in the seller's market now.
Okay, I got you. And I bought on Monday, so I got you.
Yeah. So if you might want to get out of that. Or
Yeah. Oh, yeah.
depending on where your expiration date is, if you got an expiration date that's far out, then you could still potentially find your way getting some gains, but you're gonna have to wait for that.
Nah, mine next week on the 5th, so I'm gonna go and get out.
Yeah.
I appreciate it.
Yeah, no problem. Is there an app that I can use to show when to buy or sell stocks? Because I've seen a few on commercial. Yeah, so I guess you're referring to like signals and stuff like that. Like when you start dealing with algorithms and other people's, like you got to think what I'm teaching might not be what somebody else knows. So I'm teaching you technical analysis so that you can see it yourself. But the people that are, or whatever source that you got that's telling you signals, buy signals and sell signals, they might not be using this. They might be using something totally different. So you don't know what you're depending on. I don't like when people be advertising signals like that and they don't actually teach how to look at the market themselves, because you're depending on somebody else's eyes. And if they're not looking at the market with the right set of knowledge, they could be setting you up for a loss. Plus, a lot of stuff would be computerized algorithms. They're not always right. You feel what I'm saying? So a sell signal could be triggered by something that doesn't even, you know what I mean? It doesn't even make any sense according to fundamental or technical analysis. Same thing with a buy signal. It might be telling you to buy according to some indicator, but the indicator might be lagging. So you might be getting, they might tell you to buy in, but they told you to buy in like 30 minutes late because the indicator is lagging, and now you done missed a potential 50% gain on your price, and you came in late, and now it's a pullback and you losing money. You feel me? So I wouldn't use no app or no website or no algorithm or no nothing that's gonna tell me when to buy and sell. I can't find any comfort in giving somebody else that much control without doing it myself, without seeing it myself at least. Yusuf, go ahead, unmute yourself.
Yes, for some reason, it won't let me put the 50 and 20 indicator on. Can you tell us how important it is to have the 50 and 20 indicator on?
You said it's not letting you?
Yeah, for some reason, it's trying to charge me to put more indicators on, and
how many?
I don't know too much about it. I think I got like, I'm not on it right now, but I think I got like 2 or 3 indicators on.
Yeah, so I mean, if that's the case, then that means that the free version is probably limiting how many indicators you're using. If that's the case, I would just stick to, like if I had to choose the most important indicators to use, I would choose definitely the moving averages. And I'll probably go with, I probably would go with the RSI if I had to choose 3. If you can only choose 2, then I'd probably use the 50 moving average. No, I'll probably use the 200 moving average and the RSI if I had to choose 2. All right. Pivot points are important, but pivot points, sometimes it's necessary. It can be necessary but you can spot support and resistance without the pivot points. So I would say if I had to choose some definite ones to rock with, I'd probably go with the 200 moving average and the RSI.
Gotcha. Okay. Thank you, sir.
All right, no problem. Somebody said, can I reach unlimited day trades with 17,000 in margin? No, you need 25 grand. You need 25 bands. You need 25 bandos to unlock the unlimited day trade. It just is what it is. The margin stuff, they don't even take that into consideration. So, and if you want to do unlimited day trades with Robinhood, you got to put 25,000 in there. Heaven, go ahead.
I got a question about the VIP group. I know that it's monthly. So what if you're satisfied with, learning everything and you need to go ahead and stop? Will there be an option through,
Yeah,
do I have
send
this?
the email. Just send the email,
Oh.
info@blackstockstube.com, telling you want to cancel, and it's done.
Oh, okay. I just wanted to know. Thank you.
Yeah, no problem. Is there a good plan to determine how much to set my investment margin and profit margin? To set my investment margin and profit margin. T. Williams, what exactly do you mean as far as your margin? Because when you say margin, I'm thinking about margin in the sense of trading, borrowing money, leverage. What do you mean by that? Valerie, go ahead. Valerie Bell. No. All right. Yeah.
Hi, I'm sorry. Here I go. Good afternoon. Can you tell me what are the key differences between this particular course and the VIP course?
Now, the VIP course is just continued teaching. So the VIP course is, are you in the Telegram group now?
Yes, I am.
All right. So basically, it's going to be similar to the Telegram group now, but we're going to continue to go on Zoom meetings, and we're going to continue to have access to the analysis stuff. So if you have questions about a stock and you want me to do a video for you to analyze something, or you need me to help you with your charts, and you need some more education on whatever we went over that you aren't clear about or you're struggling with, and then also keeping in tune with the market as far as just what's going on with the events and all that other type of stuff. But that's what the VIP group is for. It's going to be a smaller amount of people probably, so it'll be a little bit more active as far as the content. But that's basically what that's for.
Okay, one last question. When I signed up for this particular course, it listed everything that was included, which was a lot. It was like really plentiful. But it also said something about $30 a month membership fee for whatever it said. Was that the VIP
That's
group?
the VIP. Yeah, that's the VIP. Yeah.
Oh, okay. Okay, I got it. All right, thank you.
All right, no problem. Let me see. You can do unlimited day trades on Robinhood if you switch to a cash account. The downside is you won't have instant deposits. Yeah, you need to go ahead and research that. Maybe that's what you need to rock with. Cash accounts. TJ, you got another question?
Nah, I didn't. With my hand still up.
Yeah, my bad.
My fault.
No problem. Anybody else got questions? VIP Zoom meetings every week. Sunday, 3 p.m., same thing. We ain't switching it up. Shamar, go ahead.
Yeah, my question is it best to invest in dividend paying stocks?
Yeah, I wouldn't invest in nothing if it ain't paying no dividend. That's just me personally. Because if you're gonna invest in a company that doesn't pay dividends, then I wouldn't even consider that investing. I would just consider that, risking your money because you're not getting anything back unless the price goes up. So if I put my money into a company and the price goes up, and the stock price goes up, then I make some gains on the money I put in. But if the stock price drops, then I lose my money. Those are the only two outcomes. You don't get nothing else from that. But if you invest in a company that pays dividends, if the stock price goes up, you make money and you get paid a dividend. If the stock price goes down, you might lose some money, but you still get paid a dividend. You feel what I'm saying? So
Okay, so if I have some stocks that I already got, and then they don't pay dividends, I should be trying to sell those off because I missed like a couple of the live classes. So I mean,
Yeah.
I already looked at the first one and we looked at half of the second one, but I just decided to join this one to get better insight.
For sure.
So I think I'm gonna do the VIP thing too, but I just wanted to make sure that like if I'm buying stocks like long term situations, basically, I only want to be getting into like high. Is it like best to get into the high dividend paying ones, or
So
it really don't
this
matter?
is so class 4? Class 4 breaks that down, but what I did is I gave you 2 spreadsheets, all right, and I'm gonna update these tomorrow. Why is this?
Okay.
Hold on one second. Let me erase this. All right. I gave you 2 spreadsheets, all right. This dividend aristocrat spreadsheet and this dividend king spreadsheet. All the stocks that are listed on this one, 86 different companies that have a history of paying consistent dividends. The least amount of years is Ross. They paid 25 years straight. All right. The most is Triple M. They paid 57 years straight. All right. So these are companies that have been paying dividends from 25 to 57 years straight and they ain't missed one payment. All right. Then there's the Dividend Kings list. Not only have they paid for consecutive 49 to 66 years straight, but they also have increased their dividend payment over that course of time. So if you just wanted to shorten your list as much as possible, then I would just go and pull up the Dividend King spreadsheet and just research these companies on here. And then you got your dividend yield. So this is the dividend that they're paying out. All right. The current stock price is going to be different from this. I'm going to update it on Monday, but it's going to be different. All right. And then it tells you if they pay monthly, quarterly. All of them pay quarterly. And then the ex-dividend date. So as long as you have these dividends in your possession, as long as you have these stocks in your possession before the ex-dividend date, then you're guaranteed to get paid the next time they pay them out. All right. You'll
You said
all that in class 3 or class 4.
You said that's in class 3?
Class 4.
Class 4. Okay, yeah, I gotta go back and look at them. I haven't done them ones yet.
Yeah.
Okay, yeah. And you said the Telegram thing, real quick, last thing. So the Telegram thing is, are y'all gonna still be in there, or are you going to the VIP?
The VIP.
Okay.
Yeah.
All right, cool.
All right.
Thanks.
Yeah, no problem. Jaden, go ahead.
Hello?
Yep.
Yeah, my question was in regards to the VIP course and the Sunday meetings. Will we be able to go back as far as on the back end, just to recap and go over the stuff that we did on that call for Sunday?
Yeah, you're gonna have access to. Are you talking about the members area?
No, the VIP for the moving forward VIP
Yeah,
Sunday Zoom meetings.
What do you mean as far as the back end?
Just saying, like, see how we can just go back. Like, I can go back later just to recap everything that we did on the back end as far as right now. Would we still have that same access?
Yeah. When we get on the Zoom calls, it's gonna be similar to how it is now, except we're gonna move into more. We're gonna move into some other stuff and learn some new stuff. But for the most part, everybody is gonna be able to, like, you still gonna have unlimited access to the back end, whether you sign up a VIP or not. But it's really just, if you need extra. If you want that extra stuff, then
it's more like a one-on-one.
Yeah, I mean, it's gonna be similar to it is now, but it's just probably gonna be less people.
Understood.
Yeah.
All right, that was it.
All right. What else we got in the chat? Is the Vanguard small cap ETF a good one to do sell credit options? So all right. So for the people who trying to figure out the spreads, right? I don't want y'all to be trying to do all kinds of different stocks and securities with spreads. The point of a spread is to go with something that is consistently moving in one direction and moving slowly. You don't want to put a spread on a company that has too much volatility, too much price movement within a short period of time. You want something that's steadily going up or steadily going down at a slow rate, because you don't want to get exercised. You just want your contract to expire. You want the price to slowly move away from whatever strike prices that you have, so that you can collect the premium, keep the premium, and keep your collateral. All right. So I said SPY because SPY, it moves slow, but it slowly just moves up. Now, as you can see, these past few days, it's been retracing. All right. But it has those moments where it retraces, but overall, it just goes up. You see what I'm saying? So in this period of time right here, if you was doing put credit spreads, you would have just been making money on top of 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 money with damn near no risk. You could have just set your strike price somewhere below 50 moving average. You could have set your strike price somewhere below the 50 moving average and just been collecting money every 2 days. Every 2 days, the contracts expire. So that's for the people who just want to play it safe. Now you see it's retracing. I wouldn't be so quick to jump in on a put credit spread with SPY just because of what's going on. You got the bond yields and all this stuff making the market fluctuate. All this stuff is going on. You got to wait until this thing stabilizes before you jump in again and start doing the put credit spreads again. So, and then as far as call credit spreads, it's the same thing, but the opposite. So on put credit spreads, you want the price to go up. On call credit spreads, you want the price to go down. And you want it to go down slowly but surely. You don't want it to go up and hit your strike price. You want it to go down and move away from your strike price so that you can collect your premium and take your collateral back when the contract expires. All right. Simone, go ahead.
My question was about, I forgot.
It's all good.
I had a question. I had a question. I had to come back to you because I forgot.
Yeah, go ahead. You do it. An example of some companies that we can use credit spreads with. I'm only going to suggest that you use SPY and QQQ, triple Q and SPY. I'm not going to suggest you do nothing else with nothing else. I'm only going because that's all I only do credit spreads with SPY. I don't do nothing else. But QQQ is just as safe. It's just that they don't have expiration dates that are every 2 days like SPY. So I'm looking to get out within a couple of days dealing with SPY. Heaven, go ahead.
Just a quick question. I just signed up for the VIP. You want to use the same email, but you have to create a new account basically for this?
Nah, you shouldn't have to.
I just wanted to make sure that I clicked the right thing because it says click here to create your account.
Nah, you shouldn't have to do anything different. You should be able to go ahead and sign in with the account that you already got.
Okay, I'm gonna try to sign in now.
All right, let me know if you got any problems.
All right, thank you.
All right. Somebody else had a question?
A quick question, Mills.
Yeah, go ahead.
For the credit spread, your account has to be a certain level, right? Like in Robinhood, you can't be a level 1 or level 2. It got to be like a level 3 in order to get approved for it, right?
Yeah, you got to be level 3 because you have to enable margin trading. So because you're using, dealing with leverage and stuff. So you have to get to level 3.
So you know how long that takes or how long I got to start investing in order for me to get to level 3?
You got to make moves. You got to do something. You know what I'm saying? You got to actually get in the game and start trading. That's really what it come down to. You have to have a certain amount of trades or whatever. I don't know what their qualification is or how many, but you have to be active with the options trading. And I think somebody said if you upgrade to the gold membership, I think that might help your case. I don't know if that's like the gateway to just letting you in, but try that too. If you want to initiate the gold membership and see if they allow you to get to level 3 And if they don't, then you can just disable it or whatever, but that might help you, but you gotta trade. You gotta have some trades going.
Okay.
Yeah. What's this? SSB 77? Susie?
Yes, I have a quick question. What's going to happen to the Telegram group after today?
It's gonna be closed.
So you can't even go back to access the information. I'm gonna be part of the VIP, but I wanted to know if I could still access Telegram.
Yeah, the VIP Telegram is gonna be open, and I'm gonna move a lot of that information over to the VIP group. I mean, if it's something specific that you wanted to get to, as far as a document or something like that, just let me know, and I can just I can just throw it in there. But
Okay,
I'm gonna leave the students Telegram group open for probably like a day or so. But after, it's definitely gonna be closed by the middle of this week. The VIP Telegram group will be open though.
Thank you. I'm going to sign up for the VIP as soon as we get done.
All right.
All right. Thanks.
Yeah. Who else? Anybody else got a question?
Yeah, I have a question.
Mm-hmm.
For TradingView, you say you have the regular pay account. I don't know if you feel like comfortable sharing that information. How much do you pay a month for that? Or is it monthly or weekly? And how much is that?
I actually paid the year for the year. 1 second. Let me look real quick. Hold on. I got the annual premium. All right. They charged me $600.
Oh, okay. All right, thank you.
The pro one is 108 though. So and then let me see what else they got on here. All right, so the basic TradingView will allow you to use 12 different charts, 50 drawing things. You get access to all the indicators. I don't know how many they allow you to actually use on your chart, but you get all of that stuff. The pro membership is $155 for the year, if I'm not mistaken. And then you get 5. Okay, so you get 5 indicators on that. So if you need all the indicators that I'm using and you want to do all that and not deal with ads and all the other stuff, then you need to access at least the pro membership. At least.
Okay.
All right. And there's also other charts that you can get to that are free. I'm not gonna say that they're all free, but I know that there's other websites that you can use charts on. But TradingView to me is probably gonna be the best that you're gonna deal with. I feel like it's worth the money. I mean, your trading profits is gonna pay for your TradingView expenses. So yeah.
All right, thanks.
All right, no problem. You gave the example of if we had $1,000 to invest, will we want to invest the entire 1,000 or percentage? Is there a strategy to determine the percentage we should invest? Yeah, you need to go to class number 2. That's risk management. So the risk management class number 2 pretty much gives you a breakdown on how you should be managing your trade and your account. Definitely go to risk management class number 2 so you can figure out exactly what you're going to be able to be using. Plus, you also have a risk tolerance and profit analysis tools here in the options trading resource PDF. Risk tolerance assessments that you can take. All right. And then options profit calculator will help you gauge, what your take profit and stop losses and all that type of stuff should be. But yeah, definitely manage that for sure. Do we got any more questions? All right. Well, I hope I see y'all. If you still have questions and you still stuck, just go ahead and sign up for the VIP, man. It's worth it. You're gonna get your money back. I mean, the stuff that we're doing is we're just making money at the end of the day. So it shouldn't be that big of a deal. Plus, I'm gonna continue to go live on Instagram. I'm pretty sure most of y'all have been on my lives before anyway. We're gonna continue to do the lives. So definitely make sure you turn your notifications on. Definitely make sure that you are in tune with what's going on. Make sure you frequently visit blackstockstube.com and get your stock market news. The Forex class is coming soon. Please don't rush me. I'm going to try to give you an even better presentation that I've given you with this, as far as the material and the look and everything else. So we're going to get to the Forex class, hopefully before summer hits. I'll be hitting y'all with that. I just dropped the VIP link into the chat. So if anybody's interested in joining that, I can go ahead and do it. Shamar, you got a question?
Yeah, I just want to. Do you recommend going gold with Robinhood? Like, is that really worth it? I mean, I know it's all about making money and whatever tools you use to help you.
I have gold. I have gold because I need to be able to deposit money whenever I feel like it without having to deal with the extra stuff. And then the margins and all that stuff, or whatever they had advertised at that particular point, I felt like I needed. So I have it. I mean, I think it's $5 a month, but I get, you're not gonna, if you're active enough, you're not really gonna feel that $5 fee. So.
Okay. Yeah. Got you. All right. Thanks, man. I really appreciate it, man.
Yeah, no problem. Appreciate y'all, man. Stay tapped in. Hit me up if you're not in a VIP group, send me a DM. Keep in touch. Let me know your progress. Let me know how things are going. I appreciate y'all for joining this course. I hope y'all learned a lot. I hope y'all are able to use these strategies and hopefully change your life for the better and give yourself an opportunity to make some money off of this market and establish a portfolio and start getting some passive income. And share the knowledge with your family, share this knowledge with your friends, spread the word. You have a set of information now that the masses do not have. So whoever your friends, your surroundings, your groups, whoever you're around day to day, put them onto this information and allow them to learn from you so that you all can break bread together and we can spread the wealth in our community. All right. I appreciate y'all. And again, stay tuned, blackstockstube.com and BlackStocksTube Instagram page. Make sure you tap into my lives and make sure you chime in and let everybody know, how good this experience has been for you. All right. Appreciate y'all. Have a good evening. And happy trading on Monday. Peace.
Peace, man. See y'all in the VIP.
Thank you, brother.
Peace. See y'all in the VIP.
Yep.